Well, your trades it is, and the Friday session was a lackluster session for the Indian markets, but the entire week was action-packed, power-packed, as we did see 25,000 levels, and we also did see 25,100, 150 and above levels during this week itself. But in the last trading session, markets and in particular Nifty did manage to close around 24,870 levels, surrendering those important 25,000 up marks and up moves. This is a very important level as we were constantly trying to sustain and attain. Once we attain, we wanted to sustain those levels. But the last session, Friday session, came up as a volatile move, and of course less of market participation because the market participants are cautious about what might happen over the weekend. Nifty, if we talk about the entire week, did advance for the second consecutive week, mainly led by Maruti Suzuki, Nestle India. Also, if we talk about the mid-cap and small-cap indices for the week, it did advance on the second consecutive week. The auto sector was a top sectoral gainer, up over 5%, advanced for the third straight session, as we did see an increased momentum in Maruti Suzuki and TVS Motor. Now, we are talking about the entire week and not just a session. Auto index did register biggest weekly gains since May 2025 during this week, and also Maruti Suzuki touched the all-time high this week, which was up around 10% in one of the sessions. Nifty Realty did advance for the second consecutive week. Phoenix Limited and Godrej Properties were leading the gains, and at the same time FMCG did snap for two-week losing streak, mainly led by Colgate and Nestle India. It was the consumption story which was playing after the Prime Minister Narendra Modi on 15th of August did announce GST rate rationalization, which gave a boost up, Kanishka, absolutely the consumption, the white goods, and overall, the consumption discretionary pocket.
Absolutely, the consumption discretionary pocket has been in focus because of of the GST rationalization reforms that have been proposed. But to discuss this further and what are the cues that we need to watch out for when it comes to the next week, what is the trend going to be like? We're now joined by Rajesh Palviya, who's head of technical and derivative research at Axis Securities, and Mayuresh Joshi, head of head of equity at Markets. Markets in Hindi. Sorry, my bad. Mayuresh, let me come to you first. Despite the lackluster trade that we saw today, we did manage to end the week on a high note. Where is it that you see the market headed in the next week? And what are the cues that we need to watch out for? And also, apart from GST rationalization reforms, of course, some clarity is awaited over there. But apart from that, do you think the Jackson Hole Symposium that is happening in the US and the global markets are watching for it, do you think that is going to have some impact on India as well?
Very good afternoon to you and Mansi. No, two things. One, I think from a global perspective, I think the Jackson Hole minutes will be key in expectations of determining how the US trade policy, or rather how the US interest policy is probably going to be, and how the macro data points is something that they are believing will play out over the next few months, specifically looking at the tariff impositions that have probably happened. Again, once we are done with the Jackson Hole summit today, I think we largely head into the next week, and August 27th is when the deadline probably looms for the additional 25% tariffs that get imposed on India. So whether that deadline gets extended, are you probably going to see some element of negotiation happen before that? I think the street will be looking at it very, very keenly. So I think all these global macro events are going to be extremely important. And let's not forget that in the global macro backdrop, what you're probably speaking and looking at from a micro perspective as far as corporate earnings are concerned, I think corporate earnings have largely remained soft, which was on expected lines. But with the announcements that have probably come through, and expectations of notifications coming through for GST rationalization as an example, I think you might actually see some bump up that probably starts happening as far as consumption as a theme is concerned. And as far as corporate earnings are concerned for the second half. So it's going to be very, very interesting. I think the situation is very fluid, if I would put it that way. But the street would ideally like to watch out for these global macro events, specifically what happens with the August 27th deadline.
Okay, so Mayuresh Joshi, head equity from MarketSmith India, has a view, and it's going to be an interesting week next as well. But uncertainties over the weekend. we might come across something or the other, and that was the only reason why market participation did look less, because the market participants are kind of practicing caution. Rajesh Palviya, head technical and derivative research at Axis Securities, is also with us. Rajesh, thank you so much for giving your time to ET Now. Well, in the last trading session, Nifty did fail to hold on to those 25,000 mark. We had expectations because the week did start on a very positive note and there was a lot of conviction, but we did not maintain those 25,000 levels, at least on the Friday session. What is your view on the indices strategy-wise for the week next and the start of the next session?
Good afternoon, Mansi. Good afternoon, everyone. So looking at the structure and the way the profit booking has taken place on, especially on the today's session is again, now we are below 25,000 level. Market manages to cross 25,000 level, but the major call writing activity was not able to cover up despite Nifty was able to cross 25,000 level. So call writers were confident at 25,000 strike, 25,100 strikes. That's why we have seen again Nifty slip below to 25,000 level. Now we are entering into the this expiry week for August series, and looking at the data setup, 25,000, 25,200 are likely to act as a major supply zone for this expiry. On the downside, if we are able to sustain about 24,800, then some consolidation we could see at current level only. So maybe Nifty could remain in range of 24,800 to 25,000 for some more days. And then finally, any breakout about 25,000 could trigger a short covering action. But for near-term perspective, I think we could see some range-bound activity here onward till expiry. On the downside, again, the important support area is placed at 24,800, which is almost coincide with the 20-day as well as 100-day moving average. So these level needs to watch very closely in the coming week. But again, on the Bank Nifty, we are now trading below to 100-day moving average. We have broken all important support area of 50-day moving average, and now in today's session we have slipped below to 100-day moving average support area also. And in the derivative data also, we have witnessed a short built-up activity in the Bank Nifty. So looking at the structure for Bank Nifty, it's slightly on the weaker side, and till we are not able to cross above 55,500, I think here we could see further more weakness. And on the downside, the possible down move towards 54,800, even 54,700 we could see in the coming week. So Bank Nifty is looking little weak compared to Nifty, but Nifty 24,800 needs to watch closely in the coming week.
All right, so Bank Nifty looking weak compared to the Nifty. But on that note, we'll take a very short break. Be right back with more news and updates coming up on the other side. Hi there, welcome back. You're watching Your Trades on ET Now, and let's get back to how we must prepare for the markets next week. And we still have Rajesh and Mayuresh with us. Welcome back, gentlemen. Now, Mayuresh, let me come to you. We were just talking about GST rationalization reforms, and of course, the implementation date is what we are waiting for. And if or not, the impact is going to be seen in the festive season. Now, if we take a look at how the week has ended, Autopack, of course, was the outlier. It was the leader this week. Now, let's get your view on the entire consumption space. How do you see the consumption space panning out? And within consumption, are there any particular pockets where you find more value with respect to what is going to be the impact when it comes to GST rate rationalization?
I think it will be more a bottom-up stories for consumption. So I think within FMCG as a basket, our own sense is that volume should show a steady uptick. Input costs have relatively remained very, very benign over the last few months. They're expected to remain benign. So I think the operating leverage that can get played out with better volumes, better pricing for most products and SKUs that a lot of FMCG companies probably have. Moderate input costs will mean better EBITDA margins and therefore better bottom line growth and return ratios. I think if you go with that simple rationale, I think FMCG as a space generally should do well. Within that, Marico probably remains one of our top picks and a constituent both in our domestic and global portfolios. When it comes to domestic apparel makers and then the consumers, specifically rural and semi-rural, I think a few of the players who are more focused in these areas. What we've seen and what we've studied in the historical past over the last 2 decades, once the consumption boom starts coming back, obviously a large part of that is driven by rural and semi-urban areas as well. And therefore, apparel makers were situated in these areas. Players like a Vishal Mega Mart, players like a V-Mart Retail, can show significant growth, specifically in terms of their apparel business, their other FMCG business. And the same sales store growth should actually compound at a very fast pace over the next few quarters with these basic assumptions in place. Obviously, I think from a consumer durable perspective, urban consumption is still expected to make a very strong comeback. And therefore, I think you've seen a sentimental uptick in most white good stocks. But does that really mean that you will see spectacular rise in volumes? My own sense, it will be bottom up. So again, footwear as a space has largely underperformed the markets over the last few quarters. We are seeing some initial signs of very good price action coming through. The market is pretty huge. If there is GST rationalization, the cost of owning footwear, specifically in rural and semi-urban areas, I think that goes exponentially higher. And therefore, I think footwear stocks like the Relaxo as an example, from an urban or a semi-urban theme, stock like a Campus Activewear, which has also got completely integrated backward operations, can actually do well. So in our opinion, again, select FMCG names having leadership positions, as I said, few alcohol beverages stocks like Radico, which we continue holding, continue expected to do well. Footwear as a space expected to do well. And therefore, I think these spaces, in our opinion, is where consumption can actually pick up quite meaningfully over the next few months.
So a lot of conviction and confidence on the consumption story, and why not? Festival demand was one booster, and which we will see for the next 5 to 6 months. But even before that, the GST rate rationalization news announcement, which came in from the government, did give further boost to the entire sector. But having said so, while we are talking about the consumption story, Rajesh, I want your view on the auto and auto ancillary space. Auto sector in particular did register biggest weekly gain since May 2025 during the entire week. Now, there are a lot of positives for this sector if we see. The GST rate cut expected on two-wheelers will boost the sentiment. Festive season outlook remains quite strong. Inventory issues may see more discounts, and fall in global uncertainty augurs well for exports also. And last but not the least, the raw material prices have been stable. Particularly in auto and auto ancillary, if any scripts which are on your radar.
So clearly, yes, we have witnessed a very strong rally in most of the auto stocks. Auto index itself up by around 5% for week-on-week basis. Most of the large cap auto stocks have also done well from the two-wheeler as well as from the four-wheeler space. Some of the auto stocks where we are holding our bullish view, and we believe that this momentum can extend further from two-wheeler space. Hero Motor, Bajaj Auto, these two stocks are looking very promising. The way both stock managed to view breakout of long consolidation range on a daily as well as weekly time frame. So I think one can focus on Bajaj Auto at current juncture, and for upside we are projecting target of 8,900 to 9,000 for in the coming weeks. On the downside, 84.50 should be your stop loss. For Hero Motor, we believe that the kind of breakout we observe on the weekly chart, we believe that 5,500 would be the next target for this stock. So buy and accumulate would be the strategy. On the downside, 4,800, 47.50 should be your stop loss. From four-wheeler space, Maruti is looking very promising. The way a stock managed to view breakout on the long-term chart, I think this stock has potential to continue further more upside. So one can focus on this stock. Any minor decline should be used as a buying opportunity. Again, Mahindra and Mahindra, Ashok Leyland, all these stocks have showing good traction in terms of buying. Ashok Leyland is almost hovering near to its all-time high trajectory, and Mahindra and Mahindra is also around its all-time high trajectory. So I think most of the auto stocks are showing sign of strength on the near term as well as on the long-term chart, and we believe that this sector may extend its gain in the coming week also. So one can focus on auto stocks for momentum play in the near-term perspective.
So that's the view on the auto space. But Mayuresh, let me come to you now. Apart from GST rationalization, another surprise that we saw this week was the online gaming bill, which has now received the nod from the parliament. So what is your view on this particular space in the online gaming space? How are you, going to rotate any stocks in this space now?
No, again, I think our thesis at Markets has been very clear. I think wherever there is regulatory risk as an overhang, I think we tend to shy away from those spaces. And obviously, this space had a regulatory risk from a long period of time. So for over a lengthy period of time, what we've probably seen from a regulatory risk perspective, I think if something like this gets played out, and a lot of players are in the unlisted space as we speak, I think it creates a detrimental effect in terms of revenue flows. And in fact, for the whole business model as well. And therefore, I think the risk here is complete equity dilution that might probably happen because a lot of the areas that they operate out are under risk. Now, even if you need to tweak that platform and make it skill-based, you need to make a hell lot of changes, both in terms of monetary investments, which might also mean equity push through again. And again, I think there is no guarantee in terms of how the break even will probably be achieved. So again, I think we've shied away from these spaces. I think there are a lot of good spaces in the market to probably look at.
Regulatory risks, and one should stay away from those pieces. I completely second that thought, Mayuresh. Rajesh, we would want your trading ideas for the week next.
Two stock ideas, both on the buy side. First one is from the pharma space, that is Cipla. If we analyze the overall structure, almost consolidation of 3-4 months, and now there is a breakout on weekly chart. And the way stock is holding the strength on week basis, we believe that some more upward momentum in the coming week we could see in the Cipla. So one can buy this stock. We are projecting target towards 1650 for Cipla. Keep stop loss around 1560 to buy. Another stock, again, as we spoke, automobile is clearly outperforming its sector. And from that sector, Maruti is looking very attractive. The way stock managed to give breakout on the monthly as well as on the weekly chart, there is a pattern of contracting triangle, and breakout is clearly there on both the time frame. Looking at the breakout, we believe that Maruti can extend its gain. Already short covering is already triggered in this counter. So ahead of expiry, I think we could see another leg of rally. 14,800 to 15,000 we are projecting target. So buy and accumulate would be the strategy with stop loss of 14,170.
All right. Thank you so much, Rajesh, for that view. So Cipla and Maruti are your top picks then. But that's all the time that we have today on Your Trades. Thank you so much, Rajesh and Mayuresh, for joining us today and helping us with the setup that we are looking at when it comes to the next week. But on that note, Mansi and I will take your leave. But don't go anywhere as action continues on the other side.
We are overweight on financials, consumer staples, discretionary except auto. We are overweight on healthcare, hospitals, and power and defense. Where we are underweight on is IT, pharma, and auto sector. Recently, we even upgraded materials to overweight, but on the export side, IT, pharma are the key concerns for us.